What you see here on the screen is a tax reducing action plan. After a tax planning consultation with this client, of course you know the names were changed to protect the tax savers, it resulted in $149,284 in tax deductions and $35,684 in tax-free money for Mr. Morris. That means his taxable income is reduced by almost $150,000. And he's got an additional almost $36,000 that he doesn't have to pay taxes on in his pocket. Now, the important thing to remember here is that each program must be established according to IRS guidelines and adopted by his board of directors in order to be tax deductible. Now, the first program we set up was a home office lease. Mr. Morris operates his business out of his home, so the company will write Mr. Morris a check for $1,000 for rent every month. This will result in a $12,000 deduction for the company. Next, we set up an accountable plan for his automobile. Mr. Morris drives about 100 miles a day, going to different locations fixing computers. So the company will reimburse him at a rate of 50 cents per mile, which is the 2010 rate, and that's going to result in $18,250 in tax-free money in his pocket and a deduction of $18,250 for the company. Next, we set up a retirement plan for him. He and his wife met with our certified financial planner, and they came up with a $24,000 deposit into their 401k plan and a $10,000 deposit in each of their Roth IRAs. Now, the Roth IRA deposit is not tax deductible, but it goes along with their savings goals for 2010. The next program we set up was a medical expense reimbursement plan. So every time the Morrises have a medical expense, the company will reimburse them for that amount. So in 2009, their medical expenses were $7,184. So the company would reimburse them that same amount if every time they have a medical expense. And then the company takes that as a deduction for employee benefits. We also set up payroll service for Mr. Morris. He will pay himself a salary of $1,000 a week. That gives him $52,000 in deductions. He will pay his wife $250 a week, which results in $13,000 in deductions. And he will pay his niece and nephew, who are both minors, $5,700 a year. And since they are minors, they will not owe tax on that money. So that's going to result in $11,400 in deductions for the company. Next, we set up a daycare reimbursement plan, which will result in a deduction of $5,000 to the Morrises and $5,000 in tax-free money to them. We also set up a tuition reimbursement plan. So they will receive $5,250 in tax-free money and a deduction of $5,250 for the company. And then the last thing we set up for them was a athletic facility deduction. Since they have a pool, a trampoline, and other exercise equipment on the business premises, which is their home, they can deduct the cost of purchase, maintenance, and repair of these facilities since they are open to all employees. So based on 2009, it came up to right at $1,200. Now, all of these programs together resulted in a tax deduction of $149,284. That means their taxable income, the amount they would pay taxes on, is reduced by $149,284. So call us at Abundant Returns. We'll be happy to do the same for you. This client makes about a little over $200,000, so the more money you make, the more complicated your plan will be. But each plan is specifically tailored to each client. So give us a call at Abundant Returns. We'll be happy to help you out. Have a great day.